What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol PFE for Pfizer Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it on Friday coming into Monday, and it was all about this sort of choppy session, exactly perfect indecision doji there from Friday, and today we see a full bearish engulfment. So what does that mean going forward? Well, quite simply put, the sellers completely dominated this stock today, noting we had a gap up. We tried to run back for all-time highs. However, it was all given back and some, starting to fill that gap underneath us from Friday's session. So what we would note is that under today's low of day, which is going to be at around $52.10, the remainder of the gap fills towards $51.35. So, just shy of $1 move there. Definitely something worth paying attention to inside of Pfizer. Into the post-market session, are we doing anything impressive? Not really. We're just kind of trading around 52.50, so not a whole lot to read into from that sort of perspective. Let's take out the Fibonacci's. Of course, whenever we get expansion of range, this is something we like to do. We'll come into the first low being noted by this in here. A little bit of a dead cat bounce, but never even made it close to the 38.2, indicating that the sellers were firmly in control. Coming in this time for the full move from high to low here, what you'll notice is your 38.2 is just above this area of support from the Friday session, as well as the first dead cat bounce low. So to me, this sort of zone is the critical resistance at this point in time. If there's some sort of bounce, I would be looking for sort of short opportunities up against this area here, noting that all of these people are now overhead supply. If they're looking for a break even, this is the first place where they will start to sell for that break even. So on a 30-minute chart, if we start coming into this area and start printing inverted hammers, indecision doji candles, basically things that would make you question the strength of the buyers here, is it truly just a dead cat bounce? These candles would sort of indicate that, right? You're looking to flip short underneath the lows and retarget this, and then the full gap fill into about 51.35. If you're a more conservative trader and you don't want to take the risk at and around these levels here, then fine, wait for the reattempt of this level, the breakdown point, today's low of day, and then shoot for the smaller gap fill sort of move. That's the bear case here inside of Pfizer. The only reason to be bullish on the stock, in my estimation, is if out of the gates it doesn't even test higher, we come in lower and fill the gap, and then at the gap fill area, we start printing hammer candles, indecision dojis, basically things that make you question this time around, do the sellers need a break, right? Have they gone too far too fast? Are we going to get a little bit of a lift off of the gap fill? So from here, it's long over the highs to retarget the opening print of the day. Okay, so that's the downside case. Well, I suppose it would be the upside case after a downside pan out of the open tomorrow morning. So those are really the two scenarios I would watch out for. Any more aggressive acceptance inside of the prior day's range, you're basically looking at a half back, the congestion zone from in here, close to $54. If it never supports at the true gap fill area, 51.35, then just look for lower. You're looking for the low end of here and the prior breakout point at $50.44. That's truly going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.